What are RBI's game-changing reforms? How it will help you to pay lower EMIs? Why and how RBI is making loans cheaper, gold loans easier, and also banking more facilitated. Did you know that RBI is bringing in norms that can help you cut down your EMIs faster? It will also help in expanding the gold loans and most importantly strengthening the bank system. Hello everyone, welcome to Vajram and Ravi's Flash News. My name is Shubhangi Singh and today we are going to talk about that what exactly RBI is bringing in so that the transmission of rate cuts that they do goes to you faster. We are going to simplify all the norms that are being introduced and understand that how they are going to affect me, you and the banks as well as the economic system. So let us understand that why exactly RBI is bringing in these reforms and what are these reforms. So if we talk about the intent of bringing in these reforms, it is very simple. First, they want that the public should get the transmission of rate cuts easily and quickly. यहाँ पे RBI क्या चाह रही है कि जो वो रेट कट्स करते हैं, that means इंटरेस्ट रेट कम हो रहा है, वो बैंक्स की तरफ से पब्लिक को जल्द से जल्द मिले. सो इसलिए यहाँ पर वो नए रिफॉर्म्स ला रहे हैं जिससे मॉनेटरी ट्रांसमिशन जो है वो तेजी से हो. सो द मॉनेटरी ट्रांसमिशन हैपेंस वेरी क्विकली. नाउ अनदर थिंग दैट इज बीइंग टारगेटेड इज that the gold loans as well as large exposures they have easier rules. यहाँ पे gold loans के लिए जो specific requirements है उनको थोड़ा आसान किया जा रहा है और साथ ही साथ जो capital raising ability है especially abroad that is also being focused on. So enhancement of bringing in more capital from abroad that is also being focused on. And most importantly, credit data accuracy as well as timeliness, so that if there is some error, अगर कोई गलती हो भी रही है तो वो टाइमली करेक्ट हो सके और फाइनेंशियल सिस्टम जो है उससे इफेक्ट ना हो. अब ये जो रिफॉर्म्स आ रहे हैं, जो नॉर्म्स जो चेंज किए गए हैं, उनमें दो सेट ऑफ नॉर्म्स हैं. द फर्स्ट सेट ऑफ नॉर्म्स विल बी एप्लीकेबल फ्रॉम टुमारो इटसेल्फ, दैट इज October 1st, 2025. The second set of norms, they are in the implementation phase. How? They are out for public feedback. That means they have been open for public feedback till October 2020, 2025. After that, this draft proposal might become effective at a given date. Now let us simplify all of these reforms and understand that why I am saying that your EMIs could become lesser, that too very fast. So let us understand first the three rules that are becoming effective tomorrow itself. So when we are talking about these three rules, the first one is focused on interest rate transmission. So if you take a loan from the bank, the transmission, that means if a repo rate cut happens after you taking the loan, there can't be any change in that rate because there is a 3-year lock-in period on the spread. So spread is basically the any sort of extra charge that exists. So let's just say you have taken a loan on 7% and there is a repo rate cut that has happened, but the transmission will not take place for you because there is a 3-year lock-in period. यहाँ पे 3 years का एक lock-in period है जिसकी वजह से जो रेट कट हुआ है उसकी वजह से जो आप एक्स्ट्रा चार्ज दे रहे हैं, मान लीजिए रेट कट की वजह से आपका इंटरेस्ट रेट 6.5% हो जाना चाहिए फ्लोटिंग रेट पे, तो यहाँ पे जो आप एक्स्ट्रा दे रहे हैं वो चेंज नहीं किया जा सकता जब तक कि 3-year लॉक इन पीरियड जो है खत्म ना किया जा सके. अब यहाँ पर इसको बदला जा रहा है. दिस इज व्हाट हैज बीन हैपनिंग. Now the option has been given that banks can reduce loan. The banks have the option to reduce that so that the transmission of change of interest rate takes place faster. What will it help with? It will help the borrowers to enjoy the reduction in repo rate. That means interest rate reduces, your EMI reduces, and that will happen faster. Initially, it was only after 3 years. Now it can happen. The bank are allowed to offer that cut sooner to you. Second thing that is going to change is in terms of floating versus fixed rate of interest loans. Now the options that you have. The next change that is happening, that is related to the bank that used to offer the option of moving to fixed rate of interest. So there are two rate of interest that run, floating rate interest or fixed rate interest. In both of these, fixed rate interest at whichever interest rate you take the loan amount, that is fixed for the entire duration of your loan, and in floating rate it keeps fluctuating with the changes that are introduced by RBI. So if there is a reset, that means RBI has changed, there is a repo rate cut. So whenever there was a reset, banks were mandatorily asked to offer the customer that they can switch to fixed rate interest. Now this obligation has been done away with. That means this will give banks more flexibility and it will reduce the regulatory burden on banks. And the third thing that has been introduced is the loan expansion on gold and silver. When we are talking about gold loans, basically these are those loans which are taken as keeping gold or silver as collateral. Earlier, these loans were mainly given to jewelers. But this time, there has been a change that banks as well as tier 3 and 4 urban cooperative banks, they can now lend against gold and silver as collateral, and the restriction that was made only to jewelers, that means this was only given to jewelers, that has been given as any business which uses gold as a raw material. That means people who were giving gold loans, that have also seen an expansion, and people who could take gold loans, that also has seen expansion. In a country where gold is of cultural significance, every household eyes for keeping gold that could be used for the benefit. Now we have covered three major changes. Let us move to the fourth one, that is related to capital that was raised from abroad. So if we talk about capital that is raised from abroad, in this context, if we talk about the fourth change that is being made, it is being made for capital that is raised abroad. So if we are talking about banks and their financial strength as per RBI and the Basel norm, that is Basel norm 3rd, can you tell me in the comment section what are Basel norms and who gives out these norms? So as per Basel norm 3, they have to maintain tier 1 capital so that the banks can be financially strengthened. So when we are talking about tier 1 capital, here we have PDIs. What are PDIs? They are perpetual debt instruments. Basically, there are a type of bond which helps you to raise capital abroad. They can be rupee denominated also, and they can be foreign currency denominated also. Now in this scenario, PDI is included in tier 1 capital, and now RBI is increasing the limit. अभी RBI की जो limit थी, अब limit अगर वो बढ़ा रहे हैं, that means banks जो हैं वो ज़्यादा capital ले पाएंगे. जितना ज़्यादा capital उतनी बेहतर उनकी balance sheet और उतना ही strengthened उनका अपना internal system. So banks, they will be able to raise more capital, that means more strengthened balance sheet, and that will also lead to a strengthened financial system. Now these changes will be effective from tomorrow itself. Now let us look into the changes that are open for the draft proposal has been raised for feedback from public. So the first change is about gold metal loans. So when we are talking about the repayment tenor, initially it was 180 days, now it is being raised to 270 days. That means it will give more coverage. Non-manufacturing jewelers, they can outsource, which give the production to other people. They are also eligible, and that will be implemented. Other than that, we will also see changes in foreign bank norms. So when we talk about foreign bank norms, for their financial stability, RBI uses two parameters, that is large exposures framework, that is LEF, and then we have intra-group transactions and exposures. Now if we talk about exposures to the parent headquarter, let's just say there is a company which has headquarter in New York and they have a foreign bank in our country, it is situated here. So when we are talking about exposures to parent headquarter, they are considered in both the situation. Now they are saying that they will consider only in LEF, that is large exposures framework, that will help in avoiding double counting and it will also give a clear understanding of exposures to that foreign bank, and इससे यहाँ पे जो क्रेडिट के साथ रिस्क है उसको मिटिगेट कैसे करना है उसकी अंडरस्टैंडिंग जो है काफी क्लियर देखने को मिलेगी. इसके अलावा एक मेजर चेंज आ रहा है क्रेडिट डेटा रिपोर्टिंग में. अनदर मेजर चेंज इज अबाउट क्रेडिट डेटा रिपोर्टिंग. इनिशियली क्रेडिट इंस्टीट्यूशंस हैड टू रिपोर्ट द ब्यूरोज fortnightly. Now it has been changed to weekly. That means if the reports are sent weekly, the error identification would be faster and it will be facilitating credit worthiness because lesser errors, lesser risk would be involved. Furthermore, all the reports will also have CKYC numbers which will help in promoting, which will help in ensuring proper traceability as well as accuracy. Now, when we look at these changes, you will be able to identify the fact that these changes are not only aiming to facilitate things for consumers, for borrowers, but for bank as well as economy. So, let us understand the clear advantages that are coming from these changes. If we talk about borrowers, people who are taking loans, their EMIs will get lesser. If you are paying X amount and the rates have reduced, then the benefit will be given to you faster. Second, you will have better loan access, especially small and medium enterprises which are involved with silver and gold. That means they will have the benefit of gold loans and there will be better credit history records. Apart from this, the benefits will also be given to bank where they will have stronger capital raising because PDE limit has been raised. There will be clear exposure understanding for foreign branches and there will be more stability and risk assessment and risk management with the changes that we have seen. And all of this will mount up to impact on the economy where we will have strengthened financial system resilience, we will have better monetary policy effectiveness. When RBI brings in a rate cut, the idea is to transmit it, the effectiveness should go to the consumer and these changes will facilitate that, which will improve the credit flow, transparency and the confidence that we require in the banking sector. With this, RBI and our government will be able to focus on strengthening the banking system and bringing out the global giants that we expect our banks to be. If you want to understand more about PSB becoming global giants and the next merger that is going to happen, you can watch it in the playlist of Flash News. Now I will leave you with a practice question here. You can put down your answers in the comment section. That was all from my side. Thank you so much.